Every day, trillions of dollars move around the world, and most people never think about how they move. We just expect the money to show up. But behind every financial transaction is a financial network, and whoever builds those networks gains enormous economic influence. Last episode, we followed the rise of digital dollars. Today, we're following the infrastructure that moves them. Stay with me because by the end of this episode, you'll understand who controls the rails money moves on and why a new generation of financial rails is being built, and how governments, banks, and private companies are competing to control them, and why the companies building tomorrow's financial infrastructure could become some of the most important businesses in the global economy. Because when infrastructure changes, capital follows. And when capital follows, the financial system begins to change. So today, let's follow the money. Let me ask you a simple question. How did your paycheck get from your employer into your bank account? Or when you bought your morning coffee, how did that money actually reach the merchant? Or if you sent money to a family member overseas, how did it get there? And most of us never think about it. We just tap a card or click buy now and assume the money simply moves. But it doesn't. Behind every transaction is a hidden system working behind the scene, a system that verifies, routes, clears, and settles your money. And without it, modern commerce simply won't function. And these systems have names you've probably seen but rarely think about. ACH, FedWire, Swift, Visa, MasterCard, and newer networks like FedNow and stablecoin blockchains. Think of them like highways for money. Just as highways move people and shipping lanes move goods, these financial networks move value. Every paycheck, every mortgage payment, every online purchase, every international wire transfer, they all travel across financial rails. For decades, those rails barely change. But today, this is beginning to change. And whenever infrastructure changes, new winners emerge. Old business models come under pressure, and capital begins moving in new directions. So the real question isn't just how money moves, it's who is building the next generation of financial rails? Because that's where our story goes next. You may assume the government controls the entire financial system, but that's only part of the story. The rails your money travel on are owned and operated by a surprising mix of governments, banks, and private companies. Think about the last time you bought something online. Your payment may have traveled through your bank across the Visa or MasterCard network through a payment process before finally reaching a merchant. Behind what feels like a single transaction, or multiple financial networks are working together. For decades, that system changed very little. But today, new competitors are emerging or entering the race. Not just banks, not just governments, but technology companies, stablecoin issuers, blockchain networks, and financial innovators building entirely new ways to move money.
Simply, as the name suggests, fast payments are able to process payments in an instant, like many payment systems do. But the difference here is that the payee and the payer gets the payee gets the money immediately, and the payee's account is also debited immediately. In a sense, it gives a real time experience to the payers and payees.
Instead of waiting for days for a payment to settle, transactions can happen within minutes, sometimes seconds, 24 hours a day, 7 days a week. But this isn't simply a race for faster payments.
The other point is also that it, in a way, tries to bring in all the different types of payment service providers in the country, both banks and non-banks.
It's a race to become the infrastructure the next generation of global commerce depends on. And that raises an even bigger question. Why is everyone suddenly racing to build these new financial rails? So why, after decades of stability, is everyone suddenly building new financial rails? And the answer is surprisingly simple. The world changed. You can see that shift in data from the Bank of International Settlements. First, fast payment transactions are rising rapidly across multiple countries. Think about how you communicate today. You don't wait 3 days to send an email. You don't wait a week to stream a movie. Information now moves instantly, but money doesn't. International payments can take days to settle. Multiple institutions may process a single transaction, each one adding time, complexity, and cost for the businesses moving money around the world. Those delays matter, and that's why there's a new generation of financial networks emerging.
There have been a lot of new players who have entered the market, like non-bank players, and then also other players who are not offering payment services themselves, but have a wide customer base. And payments, in a way, is something which can be integrated into their broader offerings.
Stablecoins, tokenized deposits, programmable payments, digital dollars that can move around the world 24 hours a day, 7 days a week. This doesn't necessarily mean traditional banking is disappearing. In fact, many banks are investing in these technologies themselves because this isn't really a battle between banks and blockchains. It's a competition to build the infrastructure that global commerce will depend on for decades to come. And whenever new infrastructure is being built, another question always follows. Why are governments paying such close attention? If these new financial rails were only about making payments faster, governments probably wouldn't care very much. But money has never been just about commerce. It's always been about strategy. Because whoever influences how money moves can also influence global trade, economic sanctions, financial stability, and even national security. And that's why governments aren't simply watching this transformation, they're helping shape it.
I will now propose to EU leaders the following measures. First, we commit to ensuring that a certain number of Russian banks are removed from SWIFT. This will ensure that these banks are disconnected from the international financial system and harm their ability to operate globally.
Around the world, 91% of the central banks surveyed are exploring digital currencies. Commercial banks are developing tokenized deposits. Lawmakers are debating new rules for stablecoin and digital assets, not because they all agree on what the future should look like, but because they understand something important. If the financial system is changing, they don't want to be left behind. And as more money moves across digital financial rails, one question becomes increasingly important. Where is capital flowing while all of this is being built? Whenever a new infrastructure is being built, capital usually arrives long before the project is finished. We've seen it before. Railroads, the internet, cloud computing, artificial intelligence. Investors rarely wait until the transformation is complete. They begin looking for the companies building the infrastructure that others will eventually depend on. Today, that includes payment infrastructures, financial technology, stablecoin issuers, tokenization platforms, digital asset infrastructure, and in some cases, even U.S. Treasury markets. Because if digital dollars continue to grow, someone has to build the network that moves them, secures them, and connects them to the broader financial system. And that doesn't mean every company will succeed. Far from it. History tells us that some technologies become standards while others disappear. And that's why following the infrastructure matters, because capital doesn't simply chase today's headlines. It often begins moving towards tomorrow's systems that become obvious to everyone else. And that's why there are 3 signals I'll be watching next. So, if this transformation is really underway, how would you know? I won't be watching headlines. I'll be watching 3 signals. First, stablecoin adoption. Are more businesses, financial institutions, and consumers actually using digital dollars? Because adoption matters more than announcements. Second, the build out of new financial rails. So, are banks, payment companies, and technology firms continuing to invest in the infrastructure that moves digital money? Because capital usually leaves clues long before the headline catches up. Third, government policies, not just regulations, but legislation. Bank participation and the rules that determine how these financial networks connect to the existing financial system. Because history shows us that infrastructure doesn't transform the global economy overnight. It happens one decision, one investment, one connection at a time. And those are the signals I'll be watching. Because when those signals change, capital usually isn't far behind. Throughout history, economic power has followed infrastructures. Roads connected cities, shipping lanes connected nations, railroads transferred commerce, the internet connected information, and now a new generation of financial infrastructure is beginning to connect money. Most people won't notice this transformation or this transition until it's complete. But investors, businesses, governments can't afford to wait that long. Because by the time everyone sees the new financial system, the biggest opportunities may be already behind us. And that's why we investigate the signals, navigate the changes, and prosper by positioning ourselves before the rest of the market catches on. If you found value in today's investigation, please click the like button. And if you're interested in understanding macro shifts, reshaping our financial future, subscribe to Follow the Money and share this episode with someone who wants to understand where the financial system is headed next. Because when you understand where capital is flowing, you can better position yourself for what comes next. Until next time, investigate, navigate, and prosper.